Joining us to make more sense of this is Seth Freeman, the Chief Investment Officer and CEO at EM Capital Management, all the way from San Francisco. Seth, great to have you on NDTV Profit. I'm going to start with the $1 million question that many people have been talking about. Has the punch bowl been taken away from investors today, or only the boost content, which has been slightly lowered?
Oh, well, that's so dramatic. I think actually what happened today was reasonably expected. It was a small increment, and I think that part of it is a signaling globally that the Fed is willing to act, and that the Fed is also cognizant that there's a time lag between changing policies and their actual impact on our economy.
There's been a lot of debate, and even when Yellen was speaking, market voices were giving differing opinions, whether the Fed was dovish, hawkish, or consensus today. Which side would you take?
Well, we know that the decision announced today was unanimous. So, I think that says something about where the heads are of the different Fed governors and so forth. I think I wouldn't call it dovish or hawkish necessarily, maybe on the dovish side, but clearly, as she stated in the past, they're very oriented towards pure data. They'll be watching the data. I think it's clear from their approach in waiting so long that that they'll probably go along with rather small increments. In the past, we've seen the Fed increase rates 50 basis points. I think even there's precedent for 75, very abrupt moves. And I don't really expect very abrupt moves going forward.
And so for us, the most important question is what happens to India? How are we going to be impacted? Because there are three aspects to this. One, what will foreign institutional investors like you do right now? Will you continue to pull out funds from the Indian market or stay invested looking at it as a great market amongst equals? Second aspect is what happens to the dollar rupee play now? Will the dollar continue to look firm and the rupee suffer as a result? And finally, the volatility in all this. Going forward, what happens in 2016 and 2017 are still unknowns, and many are still deciding which position to take. So how will you deal with all these three aspects in the Indian context?
Well, I think for those thinking about investing in India, they should be prepared for market volatility, no matter whether we're talking about the Fed or some other or a domestic issue. On the other hand, in all seriousness, we've seen the rupee depreciate quite a bit over the last 12 months. This is negative for portfolios that are priced in dollars. Even if the market increases 15%, if the rupee goes down 10%, then we're not looking so great. But I would actually, absent some key drivers in terms of the Indian domestic policy, I would unfortunately expect to see the rupee to continue to decline over the next 12 months.
Will you be a buyer or seller in India today?
Buyer. Our view for over 10 years really hasn't changed, that this is a long-term growth curve. It's not going to be a straight line. We know it's not a straight line, but it's India as a long-term investment destination, in my mind, remains a fantastic opportunity for long-term investors. For traders, then you might as well just look at pure sentiment and probably skip fundamentals altogether and go for very, very short-term views and try for some market timing. But that's not where we're coming from. We think over a long haul, India will for sure be one of the world's largest economies. The question, though, for India is really about domestic policy in terms of attracting FIIs or FPIs, whatever you want to call us these days. It's about making it easy to invest in India. and avoiding so much uncertainty. Look how long GAR and the anti-double taxation tax treaty with Mauritius has been going on. I don't know why the U.S. and India don't simply amend the existing tax treaty so that U.S. investors can receive a credit here in the United States for taxes paid in India. That would be the best solution. So I don't know why these policy measures that are actually very simple don't get taken care of.
So do you feel that for foreign institutional investors, the Indian reform process gets even more important now? For example, the log jam we are seeing between both the parties in parliament over GST, is that a central issue? With the Fed decision out of the way, foreign institutional investors are going to focus on reforms which yet have not been delivered as a promise given by the Modi government.
Well, I guess I'm not disappointed because I did not have high expectations. There's a big difference between a charismatic campaigner and turning a ship as large and complex as India. I'm not. I've talked to foreign investors who are holding off investing in India because of the GST issue. I'm not really sure they even understand, frankly, what the big deal is about GST and coming up with some national tax rates and tax implementation policy. But Indians should be very disappointed with the slow rate of reform. And U.S. investors, I'm sure, would cheer improvements. We haven't really seen the type of infrastructure development or commitments from domestic institutions and the government in terms of real execution. I think if India could really get infrastructure going, we would see a huge economic gain.
What is your opinion about the attention now that goes to other global factors? With the Fed rate hike, which is obviously widely anticipated, now finally done and dealt with, will the focus be more on what's happening in China as far as the China slowdown is concerned and the oil glut? How would you approach those?
Well, the oil price situation is probably fantastic for emerging markets, especially a country like India that imports about 80%. So, that's going to be very nice in terms of offsetting the weakness of the rupee that I anticipate. China really, I think, has taken center stage in terms of its impact on the U.S. on the global economy. The IMF is now declaring it a reserve currency, yet on the same token, the INR is, the Chinese RMB is still tightly controlled by the Chinese government. China's undergoing incredible change by cracking down on corruption. And I think that, in a way, is going to have a stifle short-term growth because, frankly, corruption has been an important competitive advantage within the Chinese economy. And now companies are going to have to operate more like companies globally. And it's going to take a while to make that adjustment.
What will your strategy towards sectors be at this current juncture, Seth? Would you look at sectors with a high exposure to the US economy, given the fact that many say that today was actually a vote of confidence in the US economy? So would you look at sectors, for example, Indian IT, which could be key beneficiaries, or would you look more towards domestic consumer and manufacturing stories such as infrastructure as well as staples?
Well, I think that for India, both as a domestic consumer and as an exporter, that companies in the broad health services, health sciences area is a very good play. You get to both benefit from domestic consumption growth of medical services and the need for medical services, as well as exporting. Banking remains a kind of leading indicator and a real proxy for economic growth. So we're investing. If foreign investors want some good exposure to India, I would say investing in the few top non-PSU banks is probably a good bet. I actually, Indian media companies, companies that are producing content for consumption abroad, are excellent opportunities to get a double play as well.
With the holidays around the corner here in the United States, Seth, are you anticipating a Santa rally?
Um, I'm not really expecting that, no, because we had some vindications early on that consumer behavior for this Christmas holiday period was going to be pretty low. And the big retail chains and so forth were, had some severe stock price drops. So I don't see the level of spending or news of unanticipated consumption to really push things. I think that we're really looking more into announcements about Q4 in Q1 to drive the U.S. market.
And finally, Seth, if I can squeeze you for your 2016 target going into the new year, any Sensex or Nifty levels that you'd like to share with us?
Maybe next week.
Thanks so much, Seth. I know it's been a long day. With that, it's back to you in the studio.